All right, let's take a look at Equinox Gold. This should be pretty, I can imagine it ripped. Trading at 58.1 below our estimate of fair value, forecast growth 44.93, really good stats. The trouble with this, when you see a number that high, it means that there's a significant amount of leverage. 45% earnings growth is like insane forecast. So there's like more to this story. When you see a number that big, don't get your eyes too big. You got to look a little bit under the hood. Price to earnings, like fantabulous. Let's look at these. I mean, these things are really shot up. Price to book is 2. That means the trend is already alive, because I remember looking at these stocks like way back when, and this was like 0.5. These have run up quite a bit. So we're kind of looking at take profit zones now. This trend is already played out when we're like in the middle of it. Let's take a look at the debt. Very good debt profile. This is very low actually for a gold company. So overall the fundamentals look great. I think this is like a mid-cap Canadian mining stock. So really like a solid hold in the space. Like probably mid-cap, strong financials. Not a lot of risk of nonsense, and of course this thing shot up, and I was taking a look at this thing in the past. So this one actually looks incredible. If I basically what happened was we had this macro downtrend from July 20 to, it was a 2-year downtrend, and then it was expansive too. Volatility expansion, downtrend. You had this like stake in the ground low. And then you had this as kind of like this lower trend line. And then we shot the low and we sprang back up and we got back under or over this trend line. We kind of vacillated for a while. This is actually good. This is like, these are continuation patterns. This is a doozy to trade though at this time. Very nerve-wracking, a lot of movement. So you had this like expansion, and then now you had like a flag here. This is like a messy flag here too. Chop, a lot of chop, and then you shot up. And you're looking at, we've taken this new high, and that's kind of like our new level to respect. Let's take a look at the Fibonacci for price targets. This one, let's take a look at $20 to $50. We're at 14 bucks. I would say if you're in it, this is actually kind of like a buy. But if you're gonna buy and shoot for $20, you're only making $6. You're making a 60% gainer if you like that trade. I mean, you do have a defined stop loss here at this level at 13.92. So I mean, let's look at the risk reward. That might be worth it. Risk reward. Where's that tool? I'll just do it manually. So you have from current levels at 14, your stop loss is like you cut below 13.8. So you're risking 20 cents to make $6. It's a good trade, honestly. I don't really expect gold to go down. It's like the macro theme for the next like 5 years. And then you have this stretch target at 50 bucks. Risk reward, it's a good trade. Yeah, I like this one. Very solid. It even is kind of a buy point on the retest of this trend line. But if we go below 13.83, be very cautious. Because, I mean, it wouldn't be crazy to do something like this. You could have a 50% pullback here and it would be totally like legit. And then you could form a cup and handle and then shoot to this. And then you would have this type of price action. And then you don't really know which one of these. It's all probabilistic. So let's take that one. You know, the trade could very well go like that. So you got to watch this 13.83. And if you've been in here since the lows, like, cut half your position at 20 bucks. And if it goes below this, take profits if you're in the green. Overall, it's good though. Very good trade. Good entry, but also if you are holding in these trenches and you've gotten to this point, excellent job.